Hey everybody, welcome to your weekend review for the week of Monday, March 13th, 2023. And though I say it every week, oh, what a week this was. And it started off right on Monday. Oh, wow. MBS were up 81 basis points this morning. It was been bouncing around in that range. After 2 days of early wins, starting to wonder if the angry god that hates mortgage people went on vacation or something, until you start digging into why. And so despite the announcement that the Fed, Treasury, FDIC decided to backstop SVB, which is Silicon Valley Bank, and Signature Bank, financial markets are trading as if current events imply a sea change in economic momentum, inflation, and Fed rate policy. Regional lenders were getting slaughtered pretty much all day early in the morning. Regional lenders occupied 6 slots amongst the 10 biggest drops in pre-market. We had First Republic Bank, which sank more than 60%. Western Alliance Bank lost 52%. PacWest Bancorp was down 38%. Comerica slid 14%. Customers Bancorp dropped 13%, and Zions Bancorp was off 12%. Big thing is most of these companies have heavy exposure to mortgages. A lot of you don't see these as being names that you normally sell to. However, especially Western Alliance Bank and Customers Bancorp are who most of your companies will actually use for warehouse funding. So it doesn't really matter what interest rates can do if your company can't get a warehouse line to fund the loan. We also had Fed futures are now handicapping a 48% chance of no move in March and a 52% chance of only a 25 basis point hike. That's interesting. So now everybody's saying the 50 basis point hike is off the table. Well, we'll have to see what CPI does tomorrow. For what it's worth, many think that the Fed anticipates that these bank failures will restrict credit in the banking sector, which will have similar effect to the rate hikes. In other words, they won't feel the need to change the Fed funds rate as much going forward because of all of this. Although that could be all out the window tomorrow if we get a wonky CPI number. So basically what we have here is the second and third largest bank failures in history have happened over the last 3 days. Markets reacted in a logical direction. If anything, the drop in rates has made bigger by the fact that the market is searching for evidence that it's time for the Fed to dial back its hawkish policies. That's what today has ended up being all about. Much lower stuff between Tuesday's CPI data and next week's Fed announcement. We will have all the data we need and the requisite amount of cooling off time to have a better sense of what the road ahead looks like. I got a feeling we're going to hear a statement from the Fed here pretty soon saying that these are not related things, that we have to get inflation down, and they're viewing these bank failures as separate things. The market is expecting a plus 0.4 on the CPI tomorrow, which that's still not moving in the right direction. At the end of the day, we were up 78 basis points, ending up at 100.48, which is actually down 42 basis points from the high. So we lost some ground in the afternoon. Ending up at 100.48, it leaves us right above that purple line, which is the 100-day moving average. We have a ceiling up at 100.738. My prediction is tomorrow we are going to get the CPI number. It's going to be around that 0.4 number, but there's going to be a bunch of things that indicate that we're still spending plenty of money and everybody is going to freak out.